chatting with Miles today, we wanted to get an update on the market. Last year was quite the roller coaster ride. First half was crazy, and then we had the brakes put on, and the last half with the interest rates going up.
Absolutely.
So we've just come off of the fourth quarter 2022. Can you kind of talk to me about what happened and what your forecast is coming up here?
Yeah, absolutely. So the thing that I share with my clients is, number one, inflation is the enemy of mortgage rates. And that is really what we are seeing affect our rates big time. Inflation, I know you felt it when you go to the grocery store now.
Yeah.
Inflation is up, and so our rates are up also. However, we believe we've seen the top of inflation. We have seen some of the readings coming down. We still have a long ways to go on inflation coming down, but our rates will come down as inflation starts coming down. I'm sure you've heard in the news a lot of talk about what the Federal Reserve is doing in raising the Fed funds rate.
Yeah.
I want you to remember that the Fed funds rate does not directly correlate to mortgage rates. And
that's interesting. Okay.
So as you hear in the news, and there are going to be more federal funds rate raises, please know that that doesn't necessarily mean the mortgage rates are going up also. Our bond market is super smart. They already have anticipated, planned in, and priced in what they believe the Federal Reserve is going to do. As we look forward, we see that inflation is going to start coming down this year. Mm-hmm. And as it does so, we believe our rates are going to start dropping down. We're just barely into the fives right now, high fives on our conventional loans. We think by summer to end of spring, we'll be 5.5 or even to the low fives.
Okay, that's encouraging.
Yeah, it is. We're excited to see that.
And it's more like lower credit or less down payment or townhouse condo. That's when we're seeing the rates more in the 6%. Some are, right?
Some are, yeah.
But so the 5% range, what is that, a credit score?
That's just any of our clients who are doing conventional loans and have a 680 or higher credit score.
Any amount down payment?
Yeah, the down payment can be 3 to 20 or more percent.
And they're still in the fives?
They're still in the high fives, yep. If you have solid credit, you can get into the fives.
Okay, well that's good, that's great. And then people, as the rates come down, and we revisit refinancing.
Absolutely.
Because we are seeing some excellent deals on the market right now with sellers being willing to either help people buy down their rates, yes, or closing costs and things like that. So.
Absolutely. Yeah, anytime we help a client, we love seeing them get in the home and lock in their price right now. And we get their rate set where it's at, but we believe that, and we plan with them down the road to be able to do what we call a strategic refinance. And essentially that's where we help do the refinance at little or no closing costs to them. So they don't incur a bunch of costs in being able to drop down that rate and lower down their monthly payment. And we keep an eye on that for our clients and circle back to them and make sure that they're saving that extra $100, $200, $300 a month.
Excellent. So it's still a great time to buy a home. I did run the stats this week on fourth quarter. Our inventory was down about 600 homes here in Utah County compared to 2021. So there are less homes on the market, but it's still a good time to buy. I'm seeing, as far as in 2021, we had people on an average paying 102% of the asking price to buy a home. In fourth quarter 2022, we were down to 94% of the asking price. So you can see that there's a little wiggle room in negotiation happening now.
Yeah.
And that's another good indication that it's a good time to buy a home. Do you have something else to add to that?
Yeah, I would just add into that with the seller's willingness to give you concessions, it is so awesome for us to be able to take those and help our buyers either do what we call a temporary or a 2-1 buy down, a permanent rate buy down, and even cover all their closing costs. It is a great opportunity right now. As the market picks back up, and you could speak to this, Kathy, those concessions or the deals from the seller will start slowly going away.
They will. Well, we've, for the first time in 2 to 3 years now, we are actually seeing a seasonal dip. Yeah. Like a normal market would have. COVID, yes. We didn't see that seasonal drop here with the winter. But we are experiencing that now, and so as the spring comes on, I see people starting to come on usually mid-February, first part of March is when the market starts to pick up.
Yeah.
And then that means the competition will be there, therefore the time to negotiate a better deal is going to go away.
And in fact, we received data today that the number of mortgage applications has started jumping up.
So you're seeing an increase already?
We're already seeing people getting ready and jumping back in the markets. Yeah, just think of it in simple terms of supply and demand. And we believe that as we move to spring, our demand's going to pick back up. And as interest rates come down, that's also going to help accelerate the demand again.
Okay.